Welcome, everyone. So this panel is very dear to my heart. As we know, Türkiye is undergoing a rapid financial transformation driven by high crypto adoption and evolving regulation. Around 50% of adults have owned or currently own cryptocurrency here, and the country ranks 11th globally in crypto adoption. At the same time, it's one of the most interesting markets to watch, especially about merging the new digital infrastructure with the traditional banking system, from banks to stablecoin to exchanges. Today's speakers bring different perspectives from across that ecosystem. So thank you all for being with us today, and thank you for the audience for being here. Mehmet, I'd like to start with you. Turkey has become one of the world's most active crypto markets, but the regulatory landscape is still evolving. What's the current sentiment or mood between investors and the regulators, or the industry and the regulators, and where do you see it heading in the next few years?
Yeah, thank you so much for a nice introduction, and really appreciate the effort who brought this amazing place and amazing event. So I'm so delighted to be here with this remarkable panelist. So yes, the crypto ecosystem is evolving around regulation, but it's not in Turkey, it's all around the world. I keep calling that we have cycles in blockchain and crypto industry, but I guess this is a regulation cycle. If you take a closer look to Asia, you can see that Singapore has turned itself as a financial hub in Asia, and they published their regulation, and OKX was there to be the first big exchange to get licensed. If you take a closer look to Middle East, you will see that the UAE is the center, and they published their regulation, and we were there again to be first again. And if you take a look to Europe, you will see MiCA, now it's in place. We got the license over there as well. And in the US, there has been so many things going on. So the latest step was the Genius Act, we do know that. But apart from that, there are some important steps, especially at the local level. In every single state has its own regulation, but the federal regulation is in its way. We do know that, and we also have a license over there as well. And Turkey is no different. And the primary reason for us to have regulation in Turkey because the market is huge. Maybe we can just ask a quick question here. Can you guys guess how many retail clients in Turkey acting and investing in crypto industry? We can do a quick comparison with Istanbul Stock Exchange. I can tell the number in Istanbul Stock Exchange, it's 8 million. Do you have any idea how many? Any guess from the audience? How many millions? Any guess? 2 million, no. No. It's said to be around 14 million. So regulation is not optional in Turkey, it's compulsory. That's why government cannot turn a blind eye. But it's a good thing that the financial regulation in Turkey has a huge history. Regulators are quite experienced, and every single industry which has been regulated by government has much stable, much healthier ecosystem.
If you want to take the example of the UAE, you mentioned the UAE. So the UAE is crypto-friendly, but at the same time, it regulates, so there is no chaos. Would you say that the Turkish regulatory system looks a bit like the UAE one, that brings in innovation, wants innovation, but at the same time wants things to be clear?
Exactly. I guess we are going to be following them. We can admit that they're a little bit advanced in terms of a comparison, but what I can tell, the market is much bigger in Turkey. That's why the potential is bigger. So I summarized the regulatory framework in Turkey in phases. At phase 0, we were desperately looking for a regulation. At phase 1, now we are facing, now we have the regulation. And at phase 2, I guess industry will be full of regulated crypto exchanges. And at phase 3, we will see so many innovations just like we saw in the UAE. I think that we are going to have Bitcoin ETF, all other, let's say, revolutionary financial instruments in Turkey, but I guess we have another at least one more year to see it.
Thank you. Onur, I want to stay on Turkey, but talk to you more from the traditional banking perspective. So Garanti BBVA was one of the first in the region to launch a digital assets division. From your position at the intersection of traditional banking and at the same time blockchain, what has been the biggest challenge between merging these two different worlds, let's say?
It's a great question and probably great timing for Turkish crypto industry, by the way. So I just come here from applying to the crypto license as many other colleagues. So Monday is the last day for the crypto licenses from the Capital Markets Board and everything. So it's a very important paradigm shift in Turkish market at the moment. And as a part of the BBVA group, a huge financial group, also one of the leading banks in Turkey, we launched our product a couple of months ago, and we reached 100,000 users, bank users already. So it's great to see that demand in the market still, and there's a huge room to grow actually. And also, as a bank, traditional bank in a sense, we define ourselves as a fintech, but we are a bank for sure. Moving to the crypto scene. Of course, there are many challenges, just like you said. We eliminated some of those, but some of them remains. So what we eliminated is, for example, actually, this was the crypto. We started building crypto inside the bank two and a half years ago. So it kind of organically grew within the company, like a corporate startup or a spin-off, as you would say. So that kind of made us benefit from the current processes within the bank, current standards, quality standards within the bank. So that let us improve organically. So starting from a digital bank point of view, moving to the crypto, so that eased a lot of the challenges. However, of course, there are lots of challenges still. It's not, I wouldn't say the challenges are technology-wise, because the blockchain technology is maturing rapidly. However, the translating those principles, crypto and blockchain principles, into a heavily regulated, heavily compliant banking industry, it is, of course, one of the main challenges. And in Turkey, it's more nuanced because there is a huge demand from the consumer side as well, which is young, digital native population, which understandably regulators are seeking more balance with customer protection, financial stability, and innovation. So we find ourselves in between tracks most of the time. First of all, interpreting those evolving regulations and build the future-proof systems beforehand. And secondly, ensuring the compliance and risk management at a higher standard, as we should, which are the standards are still forming. And last but not least, maybe the most important part is the educating both the consumers, but also the stakeholders, internal stakeholders or other financial ecosystem stakeholders. So those are the main challenges that I would say. Despite the challenges, it's a long game, as we think. This is for us. Being early in that means shaping the standards and setting us a great example to the market. So that's what we're after.
Onur, I have a question. So in countries usually that have some economic pressure to them, so myself, I come from Lebanon, and in 2019 there was an economic crisis, and then there was fear from banks. So in some of these countries, we see there's maybe hesitancy from people to go towards the banking system. Have you felt this in Turkey, and how can you ensure that people who want to come to your division have this trust gained back again and don't go towards more decentralized finance?
Can you elaborate on that? I cannot hear because of there's some echo.
Can you hear me now? Is it okay?
I think it's better.
Yeah. So I'm saying some countries that have economic pressure, people have a mistrust with the banking sector. For example, in Lebanon, after the 2019 crisis, people started getting scared of the banking sector and going more towards decentralized finance, more on the blockchain, more on cryptocurrencies, which is decentralized. So in Turkey, do you feel there's this sentiment or no?
Got it. Sorry for the replay. It's because of the echo. So yeah, great question again. Turkey is banking-wise at a highly regulated sector. Financial sector is like highly regulated. We had our 2008 in early 20s, so the regulator adjusted accordingly. So I think there is we didn't saw that customer behavior in Turkey. So in 2019, as you said, like that there was a kind of a reaction to the banks, as you said. However, it didn't happen in Turkey. The banks are actually, as I said, highly regulated, and the custody, not only crypto but like in general, like the custody regulations standards are really high. Therefore, there's a huge trust to the banking sector in Turkey. That's why we didn't see that. It seemed like a diplomatic answer, but it's not. There is of course, as you said, like the crypto in its nature is decentralized. However, we see that the kind of at this phase we are still a centralized kind of. We see some kind of a centralized demand at the moment, but I'm sure it will evolve into decentralization in the future, but probably not in the 1-2 years time frame.
Thank you. Petra, if we want to look more on the European model going out of Turkey. So MiCA is seen often as a landmark regulatory framework for digital assets. Do you believe it offers the right balance between investor protection and room for innovation, particularly for smaller EU countries like Slovenia?
Yes, thank you. So thank you for invitation on Istanbul blockchain. So I'm glad to be here. Yes, I think that it is a balance between innovation and also regulation. So yes, as you know, MiCA, yes, is a legal framework for the crypto assets in the European Union, and it was based to create on one side to encourage the innovation, and on the other side to protect customers and financial stability. So yes, that's why also crypto assets service providers will be authorized and go through the formal process to be allowed to offer their services in European Union. And yes, so somehow we will protect customers with function of anti-money laundering and abuse. So also it's not the most important is MiCA, but also we have 2 more important regulation which was added to MiCA. So another is regulation on digital operation and resilience for financial sector, which establish uniform rules to protect network and information system to support business process of financial entities. And also European Union also adopted the regulation on market infrastructure of distributed technology. So it will encourage innovation. Also, as you know, Slovenia issued a bond on distributed ledger technology because of these innovative regulations. So we were one of the first European countries, and also think it's on global level. So I think that to accelerate innovation, it was important that in MiCA, the regulation and also definition of crypto assets was very robust. That's why we defined the crypto assets very broad. So yes, so we need somehow regulation to target these illicit activities. Yes, but on the other side, yes, to protect customers.
This model in the EU, how does it encourage conversation in other non-EU markets, for example, like Turkey?
Yes, so it's mean when Turkey companies want to offer their services in European Union. So yes, they have to authorize in one member state that they can offer. So it's important for the countries without European Union. Yes.
Thank you. Marco, so in countries like Turkey, stablecoins such as USDT have become a popular alternative to local currencies, especially in times of volatility. How do you see stablecoins evolving in emerging markets, and are they becoming core infrastructure, or are we still in the early stages?
Yeah, thank you very much. Can you hear me well? Yeah? Yeah, works? Okay, nice. I try to speak, I try to shout a bit more, sorry. So I think it's really different based on the different geographies, the usage of USDT, the usage of Tether. If you go to LATAM, for example, you could see that there is a lot of store of value, USDT used as store of value, because there are a lot of, the currencies are devaluating quite fast, let's say. And also for cross-border payments, because it's difficult with the, let's say, the banking network infrastructure that there is there to send money out and get money in. When it comes to Asia, for example, there is no big inflation in Asia. So to be honest, like, it's not really dollarized as well, right? So to be honest, like, people don't use it as store of value. So it started maybe with trading and investments in the past, and now it's used a lot for micropayments, retail payments. For example, the QR code systems are instant payment systems in Asia are very well adopted. There are a lot of super apps. So in that case, it's used really, really more for that reason. When it comes to this part of the world, but also, let's say, Northern Africa, it's really about cross-border payments, transactions, maybe not retail payments, but cross-border payments, and as well as store of value. I was speaking before with someone, and I just came back from a trip in LATAM. I was in Bolivia, and the central bank actually shows USD exchange rate and Tether exchange rate on the central bank. Because with capital control mechanics, they could not get any more dollar in the country. Without having dollars in the country, they couldn't buy goods and services and so on. So they could not buy any more fuel. So in the streets, you have 5 kilometers of traffic to get to do the fuel, for example. So, you know, and you know how we are just working in emerging markets. You know, like, you know how many people we have in Europe and in the US with Tether, like for USDT, 0. You know, I'm Italian. I saw my first dollar bill when I was 20, maybe, because my cousin went to the US and brought one. I didn't see it before. And if you look at the European exchanges, let's say the local European exchanges, most of the rails are in fiat, because when you are working domestically, you have instant payment system. In Europe, you have SEPA instant, so you do T+0. If you're in Brazil, you have PIX, so you do T+0 there. The problem is when you move money out and in, that maybe you are working with two counterparty banks that you don't know why the money are stuck, because compliance cannot tell you, which I understand. So, yeah.
Which is, I think, the general sentiment if we look at the region, specifically when it comes to Egypt, also Syria, Lebanon, so where countries, as you said, it's difficult to send money abroad or to receive money from abroad, or even Algeria. So you've noticed the sentiment here in the region, correct?
Yes, yes, absolutely. Because if you think about it, for example, you mentioned Syria. How are people exchanging money in Syria right now? They use a very old system, which is SWIFT, basically, because it's exchanging like a message between someone that has liquidity in Syria, someone that has liquidity here. They call each other and they say, hey, you can give $100 to that guy because I have the money, then I will settle the transaction afterwards. So that's what's happening, no? So SWIFT is a bit like that, right? But the problem is that is not a guy calling the other guy. There are like JP Morgan and Morgan Stanley and everyone in the middle, right? So you don't have sovereignty on the transaction eventually. So what is happening with USDT is exactly the same that is happening with, let's say, this model with Syria, for example. So there is liquidity in a place, there is another liquidity in the place, and these people or companies, they need to find the best way to settle the transaction. And there is no faster way than settling the transaction in stablecoins.
And just you think these countries in specific, they have the proper infrastructure to be able to use Tether and like USDT? Are they able?
The thing is that you almost don't need infrastructure. Like, if you do a peer-to-peer payment, because most of the countries are doing P2P payments, right? At least in the beginning. When it comes to retail and exchange of money for retailers, when it comes to institutionals, yes, then you need like, you need OKX, you need BBVA, you need all the infrastructure to let this cross-border payment happen. Also because you need compliance, you need the AML, and you need a bunch of things. So, but in the beginning, like the case of Bolivia, no one did anything. It just adopted. Sometimes I say that stable coins in general, Tether, is like water. Like water is everywhere already, And then one country decided to make it sparkling, to make it this, to make it that, to bottle it or not. So Tether is not because we are good and we do business development at Tether, to be honest. When I go to a country, sometimes Tether is there before me, So it's when there is a need, then people adopt a product without us doing marketing,
Thank you. Mehmet, you've recently launched a report at OKX in collaboration with big players like Visa and Google. What were the most interesting insights from that report, and what does it tell you about crypto world moving forward?
Yeah, it is an interesting report. It's a good piece to read. So most of the time we keep telling that the crypto is now mainstream. But actually, sometimes I guess we are missing that the blockchain itself is mainstream. So during the preparation phase of the report, we had a completely different approach. We just told the industry experts from Google, from Visa, from Standard Chartered, from Franklin Templeton, Manchester City, McLaren, or blockchain developers, etc. And we would like to get their own opinion about what kind of feedbacks they're getting from the industry. And report showed very interesting facts. For instance, EY people told us that 60% of the asset managers that they told would like to include crypto assets to their portfolios in upcoming 2 years. For instance, I'm glad we have Marco to talk about the payments and international settlements, but there is an interesting data gathered from the World Bank reports. Average cost of sending 200 USD in TradFi costs, guess? How many percent? Any idea? I can tell. It's around 6% traditionally. But in blockchain, it's just 5 bips. Just 5 bips. So it just shows that it already transformed the payment industry, just because of the reason Marco underlined very well. Now, apart from that, if you go to take a closer look to the retail, you can see that the luxury brands are using blockchain technologies to ensure that they have ESG compliant sourcing mechanisms to show that they respect to the mother nature. So if you take a look to sports industry, you can see the Nike is doing their NFT, they're selling collectibles. And if you go to Man City digital collectible webpage, you see that they're working with us to create another region to engage with their clients. So our aim was to show that blockchain is transforming the whole industry. It's not about crypto. It's not about the investment only, but it has a huge potential, and it's a worth reading piece, and it gathered so many attention from the ecosystem.
But if we look at crypto in general, not just blockchain, so let's say the price action or the direction it goes is sometimes still unclear to investors. Sometimes gold is up, crypto is up. Sometimes gold is down, crypto is up. So there's still not a very clear pattern to investors on the direction cryptocurrencies are taken. Sometimes there's chaos, we see crypto up. Sometimes there's stability, so it's still unclear. So this perhaps unclear path for cryptocurrencies, doesn't it make investors a bit reluctant?
Yes, I mean, there are some patterns we are all following, but I feel like now it's mainstream and it is creating all its pattern, and we can see it from the volumes that are completely separated from the other, let's say, political, institutional developments, etc. Yes, I mean, it is gaining pace and has completely different dynamics.
Thank you. Onur, so looking ahead, do you see a future where stablecoins or tokenized assets become part of everyday banking services, whether for individuals or corporates? Or do you think we're still a few steps away from that becoming reality?
As an entity in the intersection of traditional banking and crypto, we really want to bring that blockchain and crypto capabilities to the mainstream. And stable coins are and tokenized assets are really solving problems. So they are great use cases, and I'm sure they will mature and be adapted and heavily help the crypto to go mainstream. So, for example, for the benefits of stable coins, just like Marco gave great examples, and also on the tokenized assets side, there are lots of capabilities that adds value to the financial industries. There are definitely the faster settlement, instant payments, right, real-time auditing, better transparency. And these are going to change the financial industry, both on the individual side, but also on the corporate sides. The corporates are, as we see, with the regulations in the world and also in Turkey, the corporations now see the clarity in the regulations, so therefore stepping in, and they will be hugely benefited from the capabilities that will be brought by stablecoins and tokenized asset, I believe. However, there are also, for sure, there are key ingredients that should be mature. The regulatory clarity, it's going well, I think, but still there are some restrictions, unclarities, both in the EU but also in Turkey as well. Secondly, there's a need of trusted infrastructures. As a bank in the industry, we are willing to provide that. We are in that game also. Thirdly, real use cases that are beyond speculation, and we are seeing that they are finally emerging as well. So those key ingredients are maturing, and we are maybe not at that stage, but I believe we are closer than we think. We are maybe 1-2 steps behind. And at Garanti BBVA, we are actively exploring these opportunities, and we will adapt any use case that will add value to our customers, corporate clients, etc. But I believe the answer and the direction is clear. The digital assets won't wholly replace the traditional finance. They will be embedded within. They will be embedded together, and that's where we are trying to be at the forefront of that evolution.
So you don't see an end. You don't see an end to traditional finance.
I don't see it. So it will emerge. For example, definitely, there will be great use cases that the blockchain and crypto will bring. And there's for example, banking is, I don't know, more than 2,000 years it's there. So there are some basic needs, But of course, there are like many downsides to it as well. Just again, Marco mentioned, so that there should be an evolution, that's for sure. And crypto and blockchain is there for that. So it will definitely change the industry dramatically, and we won't go back. However, we will of course use that traditional side of process-wise, or I don't know, governance-wise, that we as humans learned throughout our human experience, let's say, as regulations, etc. So some things will stay there, but we will see great adoption and great changes in the financial industry in the upcoming years. I'm sure.
Petra, beyond MiCA, crypto companies will soon face new reporting obligation under DAC 8 in the EU and CARF globally. For businesses operating across different jurisdictions, what kind of preparation should they be thinking of right now?
Yes, you have right. So regulation go beyond just licensing. So yes, now we have the reporting regime, new mandatory reporting regime. Yes, on the global level it's CARF, and on a European level is Directive on Administrative Corporation Aid. So I hear that also now Turkey joined to CARF in this year, 2025. So yes, great, congratulations.
Thank you.
So yes, we join among the first jurisdictions because we have quite good companies and well known. So yes, so it's mean for the crypto asset service providers. It means according to European reporting regime, they will have to report at the beginning of 2027. But they, of course, they have to collect, verify data for 2026. So it's like in half of year. So probably, yes, Turkey will start to implement in 2028. Maybe any other?
Thank you. Marco, so I want to wrap it up with you and ask you the last question. So you operate across different regions and countries, some that are highly regulated, some are loose, some are in between, still trying to figure it out. From a compliance and risk perspective, how do you navigate these challenges, especially in markets that are still trying to figure it out?
Yeah. So, you know, a company like Tether lives in a market. I mean, also the exchanges and wallets and blockchains and so on, but lives in a market where there is uncertainty. There is a lot of uncertainty. So sometimes we are asked why we make specific decisions, why you are there instead of here, why you took this decision. But it's mostly because of there is no clarity on regulation. So it's really good if there is a sound regulation, like for everyone, so that we can play with the same, let's say, weapons, let's say, in a good way, but everyone knows what to follow and what to do. So there are different cases, no? There are the cases where a country is unregulated, so it's tough because there is uncertainty. You go there, maybe after 1 year, you have to close down everything, you have to fire people and so on. So there are many countries before in Asia, also I would say in Africa, where there are still unregulated markets. There are highly regulated markets, like Europe, for example, and I think we have been one of the only companies that has been vocal about, let's say, the weakness of the regulation in Europe. Because what happened is that suddenly there was a delisting of USDT from exchanges, not all of the exchanges. It's not because we decided to not apply because we thought that we couldn't get a MiCA license. We have been working with ESMA for 3 years. But in the case of MiCA, for example, you have 60% of the reserves that need to be held in cash. Tether would be destroyed already 10 times if we would have done that, because you saw what happened in the past. Like, I don't want to mention the examples that maybe is not, let's say, elegant. But that's why we have treasuries. Most of the composition, 95% almost of the composition of Tether reserves is treasuries, short-term treasuries. Because if someone asks us money, we sell the treasury, or we get some repos, and we can give back the money immediately. A company like Tether, is not, in general, in our sector, are not the big banks banking you. Usually are the small banks. And the small banks are even more subject to risk, so more subject to failure and bankruptcy. So that's why, like, unfortunately, it's very good when regulators listen to the industry players. It doesn't have to be Tether, but it has to be the industry players. Sometimes there is non-willingness to move forward, let's say, in some countries. But Tether is engaging with, when it comes to regulators, is engaging regulators all around the world. And is engaging with law enforcement. We work with more than 230 law enforcements in 50 countries. We work every day with DOJ, FBI, Security Service of the US, for example. We assisted more than 1,000 cases. Half of it was coming from the US, and we frozen $2.5 billion in transactions, because that's the beauty of the blockchain. We can, if we receive an order from the law enforcement, after 1 minute, we can freeze a transaction. If you have to take an order with the traditional financial system, it's not that easy, you know. So,
but in terms of regulation, don't you feel that the US still is not there? It's still not clear whether it's with the SEC or the different parties involved, whether they're classified as commodities or not. So don't you think the US is also, let's call it, a bit of a headache when it comes to this industry?
But I think the US is making big steps forward lately with, you know, Genius Act, and so. And I think that there was a big hearing of the industries, like from the industry. So, to be honest, like what I hear inside from our team is they are quite satisfied at the moment about the direction in which the US is going. So I don't think that is detrimental for our industry right now. And I see many exchanges that I'm talking with that actually are opening up now in the US. I think literally all the exchanges are thinking about moving a foot there or doing something in the US. So in the end, I think they managed to capture some interest, let's say. And but still, I think that some small countries, as we call them, boutique countries, are going to be the winner in this space. Imagine like Dubai, how it grew. To make an example, not in the blockchain sector, but in terms of country, fast, and being able to attract a lot of people from Europe, from wherever in the world. No? That's happening also in our sector. Sometimes a small country make an action, and many companies are moving there.
Marco, Mehmet, Onur, and Petra, thank you so much for your time today.
Pleasure.
Thank you. Pleasure.